Good morning, dear student. I am Kunal Kiran from the Millennium School, Lucknow. Children, we have been discussing journal. We have learned so many methods and concept under this chapter. How to journalize business transaction. We have learned in two ways, modern rule and conventional rule. Today, I would like to start another topic under this chapter, accounting for GST, goods and services tax, service tax. So, most of you would have know about GST. In a very short, GST is a comprehensive indirect tax charged at prescribed rate on every supply of goods and services except on the exempt goods and services. So GST is a indirect tax. Earlier there were so many taxes charged on sale of goods and services. They are combined under one head, that is GST. That's why it is said that it is a comprehensive indirect tax, and it has some prescribed rate by the government on every supply of goods and services. Means whenever you are selling goods or rendering services, you can charge, it will be charged on that goods sold or services rendered. So from accounting point of view, our main concern, how will we record when GST has been charged on sale of goods or purchase of goods. So the objective of learning this topic is how we will record at the time of charging GST. So for understanding point of view as well as accounting point of view, GST is categorized under three heads: CGST, SGST and IGST. CGST means central GST. Central GST means central government charge. Central government will charge this tax. And SGST means state CGST. State will get this GST. So an IGST is integrated GST. So CGST and SGST is charged on intra-estate sale of goods and services. Intra-estate sale means within the estate. For example, if I am selling goods from Lucknow to a customer staying in Kanpur, so we know it, Lucknow and Kanpur comes under one state, that is UP. So the GST which is going to be charged is CGST and SGST combined. And if there is a interstate sale means outside the state, means transaction is happening within two state. Like if I'm staying in Lucknow and I'm selling goods to a customer who's staying at Bhopal, Madhya Pradesh. So the transaction between this is a example of interstate transaction, right? So whenever there is an intra-state transaction or transaction within one state, then CGST and SGST will be charged. And when there is a transaction between two states, then IGST will be charged, integrated GST. So whenever you are purchasing goods, you will pay GST, that is known as input GST. GST paid by the purchaser of goods and services is termed as input GST. And while you are recording, if you are recording in for the intra-state transaction, then you will write input SGST, CGST and input SGST. If you are recording for the interstate transaction, then you will write input IGST. For common word I am using here, it's a whenever you are making payment of GST at the time of purchase of goods and services, then it is termed as input GST. Now, GST collected by the seller of goods and services is termed as output GST. Whenever you are selling goods, you will collect GST from your customer. So that collection of GST is termed, where you are recording as output GST. Output GST, if it is intra-state, then it will be output CGST and output SGST. If it is interstate, means outside the state, then it will be, you will record it as a output IGST. Input GST, that is GST paid on purchase of goods and services, is set off against output GST, that is GST collected on sale of goods and services. So whenever you are purchasing goods, you have to pay GST, and definitely the goods those you have purchased, you will sell it in future. So when you sold that goods, you will collect GST. So government gives you option, gives you this facility, that whatever the input GST, whatever the GST paid at the time of purchase can be recovered, can be set off. Set off against output GST means you can recover your input, you can recover your GST what you have paid at the time of purchase, right? So government says whatever the GST you have paid at the time of purchase, you can recover it at the time of, at the time whatever the GST you have collected, and the balance amount you may deposit to the government. So another clarification I have given, input GST, that is GST paid. It is not treated as a cost or expense of purchaser, since it can be set off against output GST. So whenever we are purchasing goods, we have paid the GST. It is not treated as the cost of purchase. It is treated as an asset, because in future we are getting it back. In future we can recover it. So it is an asset for us if we are making payment of GST at the time of purchase, or making payment of any expenses. So from modern rule, if we classify it, then input CGST is an asset, and from conventional point of view, if we classify it as a conventional point of view, it is representative personal account. It representing the government authority or tax authority.